Now, to help unpack the CBA result, I spoke to Morningstar's David Ellis.
It was a little bit below expectations, below consensus. It was down, the cash profit was down about 10%. But when you looked at the detail, the underlying business franchise is strong. Home loan growth was okay, I think around 4%. Margins were flat in the second half, which was good. Obviously the overall result was impacted by a large amount of customer remediation costs, discontinued operations or businesses, so it was pretty messy. But looking through that, the outliers, as you said, there is light at the end of the tunnel. It'll take a couple of years to really get a clearer view on that, whether conclusively.
Well, I wanted to ask you, these customer remediation costs, how many years do you think this is going to drag on for? Is it just how long is a piece of string?
Well, if you look at the UK with their payment protection insurance debacle, the disaster, that's been running now for several years and costing more and more each year. However, there is a sunset on that at the moment. So in Australia, I would expect there would be further remediation costs in the 2020 financial year, not just for the Commonwealth Bank, for all four major banks, but not to the same extent as we have seen in this current financial year.
Do you think directors and executives are taking more responsibility now in terms of handing over their bonuses? One leading executive has been forced to hand over her entire bonus, I understand.
Yes, I think the message has come through loud and clear. Obviously following the Royal Commission and the debacle that was for the major banks. Yes, there's I think far more accountability, far more realisation, acknowledgement by the senior executives and the boards that these issues are very serious, and what we've experienced in the last several years cannot be repeated going forward. And I think, but it'll take a couple of years to be 100% sure that is the outcome.
Now, I wanted to ask you about CBA's move into the buy now, pay later market. Klarna, this European provider, as I understand, and a big rival to Afterpay. They've bought a good amount of shares in this big investment. How do you think that's going to work out?
Well, obviously Afterpay has been a major success in Australia and is expanding globally. So it's not surprising that the Commonwealth Bank, with its significant financial resources and focus on innovation and new products and keeping ahead on the technology front, it does make sense for CBA to go down this path. But I don't think it's going to have a major impact on earnings in the near term.
Afterpay, you'd think, could be more concerned than anyone about it. Snoop Dogg, the US rapper, I understand, is an investor in Klarna, so a bit of interesting information. Now, Matt Comyn did make a comment about the trade war and devaluation of the Australian dollar as well. Your thoughts on that?
Yes, it's obviously a risk. It's not just a risk for the Commonwealth Bank. It's a risk for the global economy. It's a risk for the Australian economy. An escalating trade war. There's expectations, if it does continue to deteriorate, that global economic growth could shrink even further and possibly even move into contraction. So it is a big issue. However, Matt Comyn did also focus on a range of positives that are supporting their view on the Australian economy. There's obviously a low unemployment rate. There's obviously significant infrastructure spend. Australia's got a massive trade surplus at the moment. The federal government's budget's effectively in surplus. So and of course, most importantly, the housing market seems to have stabilised, and there's been some early tentative signs of price increases. Obviously, auction clearance rates, particularly in Sydney and Melbourne, have picked up. So there are some positive signs, but I think the biggest concern coming out of the result yesterday was the acknowledgement or the recognition that future interest rate cuts by the Reserve Bank are going to have an impact on bank net interest margins, i.e. profits, and eventually dividends. Because I don't see the banks are not in a position, if there is one or two more cuts in the Reserve Bank cash rate over the next 6 to 12 months, the major banks are not in the position to pass on the full amount of those rate cuts to their standard variable home loans, as an example, because they're limited on what they can do on the liability side of the balance sheet. So they can't reduce deposit rates as much as they would potentially reduce their home loan rate. So that's a big risk going forward for net interest margins and profitability for the major banks.
Yeah, no doubt. They'll be watching closely the next moves by the RBA. David Ellis, thanks so much for joining us.
It's a pleasure, Leo. Thank you.